This recession chat, what underpins it? Where's it come from? I think a lot of people might look at this situation and say, well, yes, inflation's a problem, but I'm looking at unemployment, 3.5%. Claims have ticked a little bit higher, but they've come back in again. Where's the recession chat come from, apart from maybe we're due one?
Well, so we are due one. I think the problem is that we've been talking about recession for ages and ages and ages. And as you said, people are getting a little bit tired of the discussions. But if you look around the economy today, it looks fairly strong. Yes, there's a soft slowdown happening, but generally speaking, things look okay. And I think the main reason is that the labour market is underpinning everything. But if I put my economist hat on, labour market is typically the last one to fall. It is the most lagging indicator here, but it's also the most important. So we're going to be watching, the lending survey is going to be really important. There is a very, very close correlation between lending data and employment. So as you see lending contract, you should see job losses increase. So we are expecting recession late this year. I know everyone's kind of keeps being pushed out, but it does look very, very likely given the amount of Fed tightening you've seen to date.
Markets are almost hoping for this recession. Bring it forward. Let's get it over with, and then we can start with the next cycle. And it seems like that impatience has been embedded in all of the bearishness that we've felt. What's worse for risk assets, though? A recession at this point or stagflation?
Oh, stagflation by far. That is the worst case scenario. One of the things that has been underpinning markets to this point is this idea that at some point in the next 6 months, 8 months, is that the Fed is going to start cutting rates. There is a lot of assumption out there that inflation is going to keep coming down. That is the consensus forecast, and there's very, very little dispersion in those expectations. So inflation, if it were to reignite and start moving up, that takes away everything which is underpinning the market today.
So if we get this ECI print showing that employment costs reaccelerated, which some people expect that to be the base case, what does that mean in terms of exactly what you just said?
Right, that means that the Fed's job is not done. We I think, are saying that, look, we're getting towards the end of the tightening cycle. Everyone believes that there's going to be a rate hike in May, but almost no one is talking about beyond May. The other part that nobody's talking about is not only that could they pause, but why couldn't they also return to the market in September with a new rate hike if things are not going as planned? They have said that they're very data dependent. They have said that they need to watch and see what the impact of Fed tightening is going to be. And if you're not seeing wage growth come down, and if actually you're seeing inflation really plateau at the kind of a 4.5% level, what's to stop them from doing a new rate hike? Now, that I want to clarify, that is not our baseline expectation,
Sure.
but I would put a fairly meaningful chance on that, probably more than what the market is putting right now.